And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to the program. I've been fascinated by one of the long-term kind of trends we've seen over the last few months, been going on for a few years, is how much capital, how much money has been flowing to the United States. And there's been this idea of US exceptionalism. In other words, their stock markets were roaring ahead, others were not. Certainly towards the end of last year, and that was even before Donald Trump won his second term as US president. It seems that now there's suggestions, and Reuters was writing a few pieces about this, the Wire agency, this may be reversing. A couple of interesting reasons for that. More stimulus in China. We see that Germany has that huge €500 billion the infrastructure fund. But really, it's about tariffs. Let's be clear what it's about. It's about tariffs, and it's about Trump's tariffs and the uncertainty. Tariffs start tonight will be one tweet, and then 2 minutes later, but sort of not for the auto industry. I mean, no one can plan under those circumstances. And I do wonder if we're on the cusp of something. Would be a remarkable shift if that is what happens, that capital starts flowing out of the US, no longer towards the US, and going somewhere else. Not entirely sure where, of course, and there's a lot that would need to happen for that to happen. But just sort of mark this moment. We may be at some kind of inflection point in terms of global capital and where that capital actually flows. It really is interesting to watch. We've been talking, and we'll speak again to some more CEOs in a moment. Mary Vilakazi, the CEO of FirstRand's, she'll be on your radio in just a moment. We'll speak to the Sanlam Chief Financial Officer as well. I mean, so far in kind of reporting season, usually pretty strong results. Not for everybody. Tough times for Grindrod, for example. And it does suggest that there are parts of South Africa Inc. that are doing very nicely. I'm not sure if any of this is seeing more money in your pocket, and that's really the question I have for you tonight. Are you seeing any difference at all over the last year? 011 883 0702 021 446 0567 and voice notes tonight on 072 702 1702.
702. Stephen is on The Money Show.
6 to 8 p.m.
Well, strong results from the FirstRand Group today. Normalized earnings up by 10% to 20.9 billion rand. Going to increase its dividends by 10% for the 6 months to the end of December. And I suppose you could say, really, all of this under still relatively tough trading conditions. I mean, the economy is not exactly booming at the moment. Mary Vilakazi is the CEO of the FirstRand Group. Mary, good evening to you, and thank you for your time. You said in your SENS statement your group actually did better than expected. There was stronger credit performance. Where did that better than expected demand come from?
Thank you for having me, Stephen. I guess this is in relation to the guidance we would have provided in September when we were looking at the 12 months ahead for us. We still saw periods whereby interest rates would be high. Inflation was starting to come down. It was encouraging, but I guess just the timing of when the rate cuts was going to come through was uncertain because the Fed, at that point, I think had to make the first move. So, I think the 6 months to the year end, F&B retail had seen quite a steep increase in the credit charge. Portion of it was driven by the fact that we kept on lending. We didn't go in and out of the market when rates were high, and I think we were seeing strain. A portion of that credit charge was from bad debts, and I think people just falling behind with their payments. In this 6 months that we are reporting, we have already seen an improvement in the number of people falling behind, and therefore, that allows that credit charge to come down. And I think that's not information that I think when we had in September and we were discussing our outlook was there, and we're expecting that with these 3 rate cuts that we've had up to January, that will still continue to flow through the customer base and the economy. But I think a big caution, I suppose something that you also touched on, a big caution is that rates still remain quite high. We think there's one more rate cut to June, and then beyond that it's quite uncertain because it depends on what's happening to global inflation. But under those circumstances, a repo rate of 7, if we have to stay there for quite a while, or 7.25 is still really quite high for the retail for the retail customer. So that's really, I think, where we are pleased with the performance that we've delivered. And then in the period to December 23, we also had some large one-offs, which we weren't sure whether we can repeat, because those come from our investing businesses, and that's volatile. And then I think the last thing, actually, which for our group is a bit unusual, is I really think it's excellent cost management. Our cost-to-income ratio ending at 48.9%. You know, I'd like to see it below 50%, but I think this print is really strong, testament to how the business can really flex costs when income is under pressure.
I noticed your West Bank division, so the vehicle space, their earnings were up by 12%. Your F&B division, it was up by 6%. Is there any reason for such a big difference? I mean, is something going on in the car market that's not happening in other markets?
That's a good observation. So F&B retail, I mean, that being 6% up, I think it's just a function of the fact that, you know, we've the impairments piece that I spoke about, you know, that I think, especially in F&B commercial, we've continued lending. And we started about 18 months ago really focusing on SMEs and lending to SMEs. So what you have in F&B is also a bit of new business origination strain from SMEs. And if that's unsecured lending we do, you know, that's a higher charge that you take up front. So, you know, so that's a different profile to the F&B charge. The other reason why earnings will be slightly softer in F&B is that it's the impact of the rate cuts. Because the endowment as the rate as rate gets cut, also that what we earn from that profile is reduced, and then West Bank doesn't have that. You know, that's a straight, clean asset financing business. But being able to grow earnings at 12%, and for us, that return on equity of 21%. I mean, I think, you know, those are really excellent results from West Bank, because the market is competitive. And they've had to be very disciplined, I think, to lend to customer cohorts that have got affordability. And that stood them in good stead. I mean, F&B does the same, but it's just that I think for West Bank, you know, that's created capacity for them, and they've been at this now for a while.
In your RMB division, your costs, and you talk about costs, your costs are up 8%, you say that's despite investment across that portfolio. And it takes us to what I suppose you would call the science of banking. So for premium customers, people at RMB, those customers, how is that science changing? I mean, what kind of services do you have to invest in to keep customers in that segment? And there's a ferocious competition there.
Yes. So I think one I'd say, you know, the key differentiator of RMB is that, you know, there's still a preeminent bank. I think we captured that if you look at just the origination and the facilitations of deals that have done, I guess, and those, so there's a big component of investing in skills. You know, I think we set up offices in the rep offices in the past few years in other geographies on the market. So, you know, one must, I suppose, see portion of that as investing in skills. And then the technology, you know, I think even large corporates, they want things to be quick and easy. If they can do things on apps, they expect the same experience on trading platforms, for instance. So there are areas in the business where we can automate, you know, some of the credit decisions. We would like for them to perhaps be quicker, and I think then you need some capabilities to do that. So, yeah, so I think it's been across the board, and I think one thing that we are, I think that still requires some investments and some time period is corporate banking capability. So, yeah, so that's why I think that profile of the cost growth for RMB, they're not yet at the stage whereby we can say, I can restrict your cost inflation because of the need to still invest in some capabilities in the business.
We've started an interest rate cutting cycle here, still a difficult situation for the bank. Do you expect any strong economic growth in South Africa this year? I mean, it's still very difficult for a lot of people. That will obviously affect your business in many different directions. And I'm trying to look away from the United States when I ask you this question.
Yeah. Look, obviously growth for 2024, that GDP print was low. I mean, we expected that. We could see in just the economic activity in the country that I think there's an improvement, but I think there's still some way to go. Our expectation is for GDP growth to lift this year to about 1.7, 1.8% for this calendar year. And I guess you will have a period whereby now these interest rate cuts and lower inflation, that's now playing out. You know, that will start filtering through for households. And our expectation as well is that business activity is going to pick up. So I think there are early signs of the economic reform processes that are underway in the country, where some small businesses are starting to be able to do more than they could have. I think if you look at the company that's fixing process trains at the moment after the standoff with the Chinese supply, I mean that's a local business that's based here in the east end of Johannesburg. So we think a concerted effort of these reforms, and I think we cited with some of our clients of what they're expecting. The logistics unlock is going to go a long way. But already there are early signs, and I guess that's what maybe informs a more constructive outlook around this year. Remember also last year when we went through a period of uncertainty pre the elections.
Yeah.
And then afterwards things just take time. So there's some reason to be constructively optimistic. Of course, a GDP growth of below 2% is not enough. Okay, but I think we can start moving away from the not point region.
Mary Vilakazi, really appreciate the time. Thank you. The CEO at the FirstRand Group.
The Money Show on 702.
Monday to Friday, 6 to 8 p.m.
The company Eurolab saying this week it's won an important victory around the costs of a cancer medication in the court of the Commissioner of Patents. Essentially, Eurolab and Dis-Chem won an order that they can process and sell a treatment used to help people with prostate cancer. Eurolab identified an androgen receptor inhibitor. It's called enzalutamide, and started to sell it through Dis-Chem. The University of California and an international pharmaceutical chain, Astellas Pharma Incorporated, they claimed they owned the patent. In the end, a judge here has ruled in favor of Eurolab and Dis-Chem. Lynn du Toit is the CEO of Eurolab. Lynn, good evening to you. You identified this substance. You realized enzalutamide could help stop prostate cancer. You started selling it. On what grounds did the University of California and Astellas try to stop you?
Good evening, Stephen, and thank you for the opportunity to talk to you and your listeners. So, Stephen, we actually registered this product with SAHPRA, with the regulatory authorities, a good 18 months ago. And when we registered it, we did recognize that it was still under patent. And we started to get emails from the University of California, from Adams & Adams, who are the patent attorneys for Astellas, to say, we should not be launching because this product is still under patent. We approached Astellas for an early launch. It was unsuccessful. So we approached our patent attorneys, Von Zadels, and we said to them, is there any opportunity from a patent perspective to launch this product? They looked into it and they gave us the green light. They gave us the go-ahead. They said, yes, there definitely is. It is open to be challenged in court. And so we went to court with Astellas, and we actually won the case on the 25th of February. The judgment came through that we could continue selling the product. So we did actually launch the product at the end of last year, purely because there's a saving to the patient of around 60,000 Rand per annum, and these patients are sometimes on this product for 5 years. So in total, around a 300,000 Rand saving, which is massive for a cancer patient and their family, actually.
So, Lynn, I mean, on the face of it, it sounds like a kind of principled victory. But as I understand the judgment, and I had a moment to glance at it today, the main reason you won is actually because one, perhaps two of the researchers in the US who first identified the substance did not fully give up his rights to the patent to the University of California. I mean, it doesn't look like it was a sort of victory on principle. It was a victory on the sort of basis of a technical legal mistake by your opponent. Would that be right?
Yes, that's absolutely right, Stephen. Yes, that's 100% right. And, from a Eurolab perspective, we often register, because we identify these expensive molecules way in advance. We often do have the products registered, and a couple of years ago we actually were successful as well with a product called lenalidomide, where that patent was challenged as well, and we continue to launch it. And I think the big thing with cancer medicine is providing the access for patients. And whilst we respect the patent laws of the country, if there's an opportunity that's open to a challenge, we certainly will take up that challenge. And for Eurolab, it's actually been a victory for patients first, and then for us second. And also, I just want to correct something from a Dis-Chem perspective, because I think there's been a lot around the Dis-Chem involvement. Eurolab distributes its products through every single wholesaler and every courier pharmacy out there. So it's not only just Dis-Chem. What did happen, though, was Astellas went for Dis-Chem to say, you're not allowed to sell the product. Dis-Chem obviously challenged that and said it's a SAPA-registered product, it has an SEP, and we will continue selling it. So, but actually we distribute our product through every distributor in the country. So it's available for patients wherever they go.
Lynn du Toit, thank you very much indeed, the CEO at Eurolab.
The Money Show
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
and DSTV channel 856.
Well, occasionally you will get in touch with us and tell us about problems you're having doing your business. You know the number, it's 011 883 0702 and 021 446 0567. Someone who's done that is Julian Scher. You may well remember him. He's a director at Strauss Scher Attorneys in Sandton. Julian, hi. Good to hear you back on the radio for a moment. You're having huge problems at the Master's office. What's going on?
Stephen, hi. Yeah, not the Master, the Deeds Office, the Registrar of Deeds. And I just thought I should bring it to everybody's attention. The Deeds Office is based in the old Sanlam Centre in Johannesburg. And on the 25th of February, which is I think last week on Monday or Tuesday, the Deeds Office stopped accepting deeds for lodgement. Now, the way conveyances work is that you lodge various documents for purposes of transferring properties or registering bonds in favor of banks or whatever it may be. And on average, there's about 700 to 750 of these things lodged in that Deeds Office every day. Can be considerably higher than that, but if you work on an average of 750. So only tomorrow, I've learned this afternoon, will the Deeds Office start accepting deeds again, but even then with a limited staff. So we've had 9 days, approximately 6,500 deeds that would have in the ordinary course have been lodged that haven't. So a lot of people have missed out on getting their transfers registered. Banks don't get their loans registered or their bonds registered. They don't pay out on bonds. It has huge knock-on effects. And it's all down to the fact that the building itself, which is an old building, apparently there was some drama with the lifts. The air conditioning doesn't work. The working conditions are atrocious. Department of Public Works doesn't talk to the Department of Rural Development and Land Reform, which is the government department under which the Deeds Office actually sits, as the Deeds Registry system sits. And the staff have just refused to use lifts. It's 22 floors up and 25 and 4 and 5, I think, the floor levels in that building. And so they've set up camp on the ground floor. There are a few of them trying to work. And apparently the conditions there are absolutely atrocious. So there's just been no... And what I hear from my colleagues who go in there every day is that nothing seems to be done about it. You know, they're all complaining that the Department of Public Works doesn't talk to them. Their own DG doesn't talk to them. The registrar's running around. And I feel sorry for them. There's a good bunch of people there. And I think we genuinely have a case of a building that's, you know, not safe to work in, quite frankly, by the sounds of it.
Julian, I mean, what happens if something happens to all of the documents on those floors? I don't even want to think about it. But clearly action needs to happen now.
Absolutely. It's imperative for the economy. It keeps the city of Johannesburg rates and taxes. It keeps all sorts of things. The fiscus transfers a number of them where there's VAT registered. SARS get their VAT at the end of tax periods. These delays have knock-on effects. And, of course, for the profession, for the conveyancers themselves, they don't get paid. The banks don't earn interest. Buyers and sellers find themselves unable to get their hands on their proceeds. They've committed money elsewhere. It just simply, it's really, in a country like ours, it's very sad. And I'm just hoping that this brings to the attention of, you know, the public and hopefully the department, the DGs are listening this evening, and we get a bit of action on this.
Julian Scher, thank you very much indeed. Director at Strauss Scher Attorneys in Sandton. Your experiences of that office, please. 011 883 0702 021 446 0567. Especially if you actually work there, would be good to hear from you.
The Money Show.
The Markets.
Norman McKechnie is an independent investor. Norman, good evening to you. FirstRand, you heard Mary Vilakazi earlier, fairly strong results.
I think what really impressed me was the operating costs only up 4%. So your revenue was up 8% and your costs up 4%. So you get that what we call the jaws opening up, and that resulted in the return on equity or the return on shareholders' funds up 21% and earnings up 10%. But I think Mary covered that fairly well. I think the only thing that perhaps wasn't covered was Aldermore, which is UK financing where there is some litigation. And there doesn't seem to be any extra costs having been brought in there. But otherwise I think those were a good set of numbers.
Sanlam, we'll speak to them in just a moment, also quite nice.
Yes, I think if one looks at Sanlam, obviously you've got to strip out the Capitec once-off fee to look at what things should look like in terms of organic growth. That was up about 14%. General insurance positive, up 40%. Investment management, 14%. There was some reshuffling in Sharia finance, selling that or partially selling that and buying the insurance. You had short-term insurance, Sanlam, which they own a big chunk of, doing well. And then they've got diversification and future growth in India and Africa. So, net again looking pretty good, and return on equity, the same sort of story as FirstRand, up 20%. So that looks pretty good.
Grindrod, I mean, if you look at where they operate, KwaZulu-Natal, flooding, Mozambique, there was some political violence there last year. Tough time for them?
I think that's right. I think if you look at it in terms of, they talked about border disruptions, but if one breaks that down, it was really election-related unrest, closures as a consequence. You had cyclones which were disruptive. 50% of their earnings are from SA. The Maputo harbour didn't take any cargo post the election unrest. Revenues were down 2% and earnings were down more than a quarter. So the impact there over sort of 200 million in terms of headline earnings. It just goes to show you, if you get the politics wrong and you get the volatility, and weather is something you can do nothing about. But it's certainly some short-term headwinds. I think further out, a good company. Price has come off quite a bit. One probably waits for it to consolidate and waits for things to improve in Mozambique before one re-looks at it.
Norman McKechnie, thanks very much indeed. Independent investor, really do appreciate it. It's just gone 6:30 on The Money Show.
The Money Show
with Stephen Grootes.
Well, good to hear from you tonight on 011 883 0702 021 446 0567. You heard Julian getting in touch with us earlier, talking about problems with the lodgement in terms of court proceedings, things which are very difficult to do in terms of deeds in particular. Is there something that is standing in the way of your business that maybe could make some kind of difference? Something that you kind of know, this were removed, improved, sorted out, fixed, whatever it is. Maybe it's just a pothole in front of your entrance. What would that difference be? What difference would it make? It would be really good to hear from you tonight. Voice notes as well on 072 702 1702.
702. Stephen is on X.
At Stephen Grootes.
Well, the insurance giant Sanlam reporting today that new business value added has allowed it to increase its dividend by 11%. The company also jointly announcing with 91, the two have now formally entered into agreements for the strategic partnership they announced last year. Abigail Mukhuba is the Chief Financial Officer at Sanlam. Abigail, good evening. Thanks for your time on The Money Show. You say your results were largely because of the new business value that was added. You had more business, more cash flows from clients. It looks like there are a lot of people looking for your services. Where was this demand coming from?
Good evening, Stephen. Yes, it was across the 3 regions where we operate, both in South Africa and the Pan-Africa line of businesses or geographies, as well as in India. But if you look at our offering, it was pretty much across all lines of business, whether it be insurance, in terms of life or general insurance, but also credit, as well as wealth and investment management as well. So it was across the different lines of businesses.
It seems a lot of your sort of recent growth involves other partners or deals or mergers, so Asapol, 91, or Ubuntu Borto Investments, a lot of deal making. Are you still in the deal making business? Is that still a part of your strategy going forward from here, or are you kind of going to digest it all for a while?
So a lot of our growth actually for this financial year those M&A activity and the partnerships particularly did not really have an impact or significant impact in terms of our earnings generation or some of our KPIs. Those partnerships and the recent transactions that we have announced are really to position us for future growth if you look into the medium and longer term. And we're doing well. If I look at the Sanlam Alliance joint venture as an example, it's performed well, but its aspirations for the next 5 years are also even greater, and we expect it to contribute even more in the longer term. In terms of are we going to continue with M&A activity, to the extent that it creates value for our shareholders and our stakeholders, of course, and to the extent that we can afford it and we've got resources for it, of course, we would look at it. It's not a case of M&A for the sake of M&A. It's also making sure that we've got disciplined capital allocation.
Your general insurance new business volumes were up by, I think it was 4%. And particularly I'm interested in life insurance. Do people still have money for that? I mean, is there still a sense this is something you must have, even if they don't have a lot of discretionary income at the moment?
People make money available for it. I suppose you've heard the saying that insurance is sold and not bought. I think over the last few years, people also appreciate the value of having insurance, particularly in the event of an unfortunate event at home, and making sure that you've got cover. So far, what we've seen with our retention of clients is that they do value it. Where they are having financial troubles to maintain their premium payments, they do reach out and we enter into some form of an arrangement to make sure that at least we give them some reprieve for a limited amount of time until they're able to then continue with their premium payments. But yeah, in terms of share of wallet, of disposable income, yes, we have to compete with many other things, but I think people still appreciate the value of having cover.
You've now signed the agreements with 91 to operationalize your deal with them. They get Sanlam Asset Management. You get 12.3% of 91. There's a lot more to it than that, Abigail, but that's the bare bones of it. The regulatory processes, they're underway here and in the UK. I think the UK one might be slightly simpler for various reasons. How long are you expecting all of this to take before things get going properly?
We've worked with an expectation that we should have all regulatory approvals, both in the UK and in South Africa, in totality at least by the fourth quarter of 2025, so towards the end of this year.
Okay, so you're not expecting any problems. You think things are going to move quite nicely?
You always hope for the best and you prepare. You also obviously try to build in some extra time just in case. But generally, when you follow processes and you comply with the regulatory requirements, sometimes it does take long, but as you follow the steps, you do get your approvals as you follow the process.
Abigail Mukhuba, thank you very much indeed, the Chief Financial Officer at Sanlam. Well, your views on that. Also, what's in the way of you doing business? 011 883 0702 and 021 446 0567.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Well, if you spend any time on social media, do you still? I'm sure you've noticed that influencer campaigns do seem to be growing in reach and power. They're also, I think, becoming a bit more professional. I mean, you may remember when it seemed everyone under the age of around 16 wanted the Prime energy drink, or how suddenly everyone wanted one of those ridiculously large Stanley mugs, you know, the ones that I'm talking about. Those were driven entirely by social media. It does seem the market here in Africa is beginning to grow quite strongly. Mohale Moloi is a content director at Irvine Partners. They've just signed a big deal with Dream Influencers, their partner here in Africa. Mohale, good evening. I mean, we kind of all know the power of social media. Is there still a large, I suppose, untapped market for influencers and content producers in Africa?
Hi, Stephen, and thank you for having me on the show. Yes, there is still large opportunities. I think the world is taking notice of Africa's cultural products, from music genres like Afrobeats and Amapiano to the food that we have, jollof rice and things like that trending. So the world is taking notice of Africa as the place of great cultural products, and people want to tap into that. The creators on the continent are using their phones, using their content to be able to tell authentic stories, and there's a real hunger for brands to tap into that.
I mean, when influencers first came on the scene, I think one of the sources of their power was that you didn't really know that it was advertising. You didn't really know they were selling something. I mean, it became more and more obvious pretty quickly. Now that people know that, has that lessened their power? I suppose, let me put this in another way, as the people who go onto social media are more adept at understanding and interpreting social media, does the influencer still have as much power as they did at the very beginning?
I think that conversation and the way people view online adverts in that way has changed. And part of the reason we're working on this partnership with Dream Influence is that we want to remove the sort of link affiliated world of marketing and make it more sort of in depth with brands being able to communicate and actually form authentic partnerships with these influencers. It's not just about the affiliate links that they post, but it's about how do they tell the story of their brand, how do they connect with their audience, and what value does that provide? They need to be clear KPIs, which is what some of the marketing managers I sit in rooms with want to see. They want to see how that value from the video they post translates into sales, into conversions for them on the other side.
And it can be difficult to know, of course. I suppose the other question then is influencing, or whatever you want to call it, the content that's being produced for this, is it getting more professional? Is it getting better?
It certainly is. And I like to actually, the word influencer or internet personality seems to dominate how we think about these workers. I like to use the term creatorpreneur because what they're actually doing is creating content businesses online. They're able to monetize by selling digital products, and they're also, turning their passion into profits. So this is a field that's turning much more professional. And today we were working with a content creator who, in their content, was also talking about the need for people to be aware of issues like tax registration, when they need to get registered, and how they need to file should they be making a certain amount of money from their business. So it is professionalizing, but we also need to play this role where we open up the industry in a way that allows people to access it. So it's demystified, moving away from that space where you need to know someone in order to get into the door. So it's actually quite a dynamic space, and there's lots of opportunities for growth. I mean, it is projected in the next 5 years to be worth more than $18 billion. So this growth needs to be tapped into in a way that the creators themselves help professionalize, and also brands are able to connect with the people that are the people that put them in front of the right audience.
And there's quite a lot to it. I mean, they're perhaps one or two risks that may just be worth considering. I mean, we know that AI bots can write. They'll be able to create videos soon, and the high-quality videos that they will create will first be short videos, which would be ideal for, this kind of content. Is that going to be a problem? I mean, at first it'll be an aid, but could it one day compete?
I think people will always be able to tell the difference between an authentic storyteller, someone that they relate to, someone they see themselves in, and the content that's generated from AI. What I see the potential of AI doing in this space is allowing creators to create more high quality content as well by, bridging certain parts of their videos, enabling them to edit videos quicker, or enabling them to, create images that fit the feel and the look of the content that they're going for, but in a way where they're still at the center of telling the narrative. People will always be able to distinguish from the two, but it's about how do they use these tools, how are they enabled to use these tools in order to monetize their content further.
I suppose it's no different from ordinary marketing. I mean, I don't need to Google to know that Harrison Ford is not Scottish when he's drinking a particular whiskey, for example.
Exactly. And that genuine connection really does come through. When I'm in the room with marketing managers, they are wondering, is this getting to the right person? Is this really landing in front of my key audience? And well, I can speak from my own personal perspective. I ended up getting a great deal on a car because I was actually watching quite a lot of motoring creators online. So this is just one of the ways that creators don't just provide value for brands, but they're providing value for their audiences. And it's down to the way agencies like ours, like Irvine Partners works, is to bridge that gap and make sure that they're able to tell stories that end up helping people.
The other thing that might be a concern is that social media itself can change quite quickly. So, for example, in the last sort of 18 months since Elon Musk took his chainsaw to X, it's lost huge numbers of users and advertisers. I no longer bother with it because it just became an awful place. TikTok suddenly was nearly banned in the US and then suddenly wasn't. So you can be putting a lot of time and effort into building a profile, building campaigns, and something completely out of your control comes along and changes the entire ecosystem around you.
That's true. There are challenges around platforms, but I also think there's a certain amount of resilience that creators on the continent are displaying. You know, they're not putting all their eggs in one basket, but they're also making sure that they monetize in ways that are very fascinating. I think of creators like Poppy Sibia, who've actually used their platforms as a show, where she takes you around the continent into so many different cultures, into these different communities and landscapes in the continent, and actually shows you what it's like, a different sort of less glamorized travel experience, but it's still engaging content. It's still content that people aren't going to see elsewhere. And I think as platforms navigate whatever shifts come with them, creators will remain resilient and find ways to tell their stories because, yeah, there's just really no stopping the internet, is there?
Well, I mean, you say that. Someone made the point to me once, and I'm not sure if I agree or not, that TikTok will be the last social media because there's kind of nowhere else to go from here, from short videos, you know. And I kind of wonder about that maybe we're kind of at peak social, if I can call it that. I mean, it's not going anywhere, don't get me wrong. I just don't know necessarily if there's going to be anything after TikTok.
Well, you know, when TV came along, it was assumed that it would kill the radio star, and that hasn't happened at all.
Nice
right?
example, yes.
So I think there's a lot of resilience that will still come around, and people will want to consume media in different ways. And as things change, people will adapt to those changes, and what works will work, and what doesn't work will probably naturally fall away.
Thank you very much indeed. Mohale Moloi, Content Director at Irvine Partners. Interesting to see what people are looking at when it comes to that space. Certainly a large untapped market. Plenty to come in the next little while. We'll be talking about funding and small businesses. We'll look at AI in the entertainment industry. Don't forget investment school and emerging markets. All of that to come. You're with The Money Show, 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show is brought to you by Absa Corporate and Investment Banking, a Pan-African bank that's invested in your story because your story matters. Good evening. Welcome to the second hour of the program. Still looking for problems that stand in the way of your business, things that you know that you come across every day that could be resolved. And I suppose it's really inspired by Julian's call earlier about problems at the deeds office. 011-883-0702, 021-446-0567. It doesn't have to be your business, by the way. You could just work for a business and see the same problem all the time, day by day by day. Voice notes as well on 072-702-1702. Lots going on over the next little while. And we'll be continuing the conversation around sort of artificial intelligence and entertainment that we sort of touched on in that conversation around social media. We will also be talking about funding for smaller companies. And then as well, of course, looking at the situation around investing in emerging markets. That's an investment school tonight. I do get a sense, and I mean, it's early days, very early days, but you do get a sense about global capital maybe beginning to think twice about the United States. And this is all about Trump and tariffs. I mean, it's no more simple than that, no more complicated than that, rather. It just seems that really is what people are concerned about. And that's why money may be flipping. Well, we'll see what happens. And of course, difficult to know exactly what is going to happen. But let's just see how that pans out. I suspect we'll spend some time on the Money Show tomorrow focusing on that, actually, because I do think that this will be a really important shift. More results as well to come over the next couple of days, and interesting just to hear from CEOs and from the people running companies about how they feel about the future.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, it was the Oscars this week, almost passed me by actually. And it turns out that a film that used artificial intelligence was among the winners earlier this year. A song that used AI won a Grammy. And a lot is changing in entertainment. Prime Video, Amazon service, they're testing the use of AI language dubbing that might make a difference. Siphumelele Zondi is the tech expert we speak to. Siphumelele, good evening. Was not aware of a film using AI. What did they actually use it for?
Hello, Stephen, and thanks very much for inviting me. All right, so the film that used AI is Brutalist. And it actually did win 2 Oscars. And one of the Oscars that it won was for Adrian Brody, and he received Best Actor for that. And then they also received Best Original Score. So what did they use it for? They actually used it for dubbing, or to sort of refine the Hungarian that the actors speak for a short time in the film. They largely speak English, but there's a period of 10 minutes plus minus where they speak Hungarian, and that's what they used AI for. So it sort of like refined their speech when they were speaking Hungarian, and it fixed their voices a little bit so the accent would sound almost correct.
I mean, there's quite a lot that you can do with sound and artificial intelligence, and Amazon Prime Video, they're looking at something like that.
Oh, yeah, totally. They're also looking at using AI for purposes of dubbing. We do know that in various territories, for example, if it's a Hollywood film and let's say you're in Germany, you are likely going to watch it in German. But what's been done up until now is that they use voice actors. We do sort of get that here as well. There are a lot of telenovelas out of India that would be seen in isiZulu, for example, in South Africa. And it's voice actors that would be doing the dubbing that would translate those telenovelas and use their voices for them to be seen in isiZulu in South Africa. So what they want to start experimenting with, or what they're already experimenting with, but it seems like now they're going to make their experiments public and start to screen their experiments that would be dubbed with the usage of artificial intelligence as opposed to voice actors as we've been seeing up until now.
I mean, I don't know how I know this, but the person who did the German voice for Arnold Schwarzenegger in all of his big Hollywood movies was the same person. So he became a star in Germany just because he always did the voice of Arnold Schwarzenegger. I mean, this is someone who's going to be out of a job along with a lot of other people, obviously, if this continues.
Oh, totally. These are, I suppose it is the beginning, because when you also think about The Brutalist, for example, that's a Hollywood film that received 2 Oscars earlier this week. When you think about that, is that normally it would be locals that would be used for those films, but sometimes they do not, actually. Sometimes they get the actors themselves to try and speak the local language. You may think of Black Panther, where for a part of the film, or with some words and sentences and phrases, they were speaking Xhosa, and South Africans would say, but those Hollywood actors don't quite sound like Xhosa speakers. But it's Xhosa nonetheless. So maybe you can look at it that way, that there are instances when they are not even using voice actors to try and do the lines in the language. They use the Hollywood actors themselves to try and speak in the foreign language, and they might not get the accent right. They might not get the dialects right, and when they use AI, they will then get the accent and the dialects. And yes, there will be instances when people will now not be utilized, because they will not be utilizing voice actors as much as they did and as much as they have done up until now.
The song Now and Then, it won a Grammy. It was about the Beatles. It also used AI. I wasn't aware of that.
Totally. It's a Beatles song. So the Beatles did win a Grammy this year, and they did use AI, but they did not use AI in a similar fashion to how it was used by The Brutalist, the Hollywood film. It was not to doctor the voice, or so they say. If we believe what they say, they just cleaned an analog recording of the tape that probably would have a little bit of crackling, right? And they would bring it into the digital age so it can then be released, because the Beatles do say that they did release quite a lot of work back in the day when everybody was still alive, and some of the work was not released. And in order for it to then be released in the format that we consume music in today, it needed to be cleaned a little bit, and they used AI in order to do that cleaning and to get rid of those background sounds and the crackling that they would have had in the old recording, in the old formats.
Have we seen a lot of AI being used in South African music?
We have, actually. When you think about Ricky Rick, who did pass away over a year ago, there's a song that's of his that was released with his voice, with the blessing of his family, of his mother, and none of it was his voice. It sounded like him when you listen to the rap song, but none of it was his voice. It was all AI. His voice was doctored by a system, and yet he gets the credit for this particular song that was released posthumously. So yes, it's already started happening in South Africa, and it's happening in a much bigger way than it was done by the Beatles in their song, because here they pretty much recreated the voice of a late rapper.
I mean, at some point, I'm sure people are going to want to know what they're listening to and who they're listening to. Are you expecting regulation in this space? And I mean, maybe it's already too late. I don't know what'll happen.
I suppose there needs to be regulation, and it's not just in this space. As AI tools are being used in various methods and in various forms, in the place of work, in the place of business, in the place of the business of entertainment, even here, right? As we talk about people losing employment and being replaced by AI, so there must be some sort of regulation on what can be used, how it can be used, and even the ethics of it all, right? Because with the Ricky Rick situation, yes, they did get the blessing of the family for them to do that. And you would then think, if they got the blessings of the family, that maybe some of the proceeds would go to the rapper's estate, right? But what about situations where, for example, they don't go to the family and they release work of an actor who's since passed, or even a singer who's still alive, but they don't ask them for permission. They utilize AI in a way that it sounds like the person's voice, but it's not. It's a machine. So what is to stop them? If there's no regulation, then anything can happen. So like in any space, as with many conversations about AI, yes, you may say it's early days of AI, but it is moving really quickly. And so, yeah, we would have to have regulation.
I mean, I just don't know if you'll be able to work out who did what and who didn't. I mean, if you're listening to something that's sort of being dubbed from another language, you wouldn't know unless someone told you, and even a regulator wouldn't necessarily know. I'm not convinced the people involved in this are going to be as ethical as you might want them to be. I mean, it's going to actually be quite a thorny issue. I can see lots of little moral arguments popping up left, right, and centre.
Oh, totally. And also think about it in a situation where it's even beyond the voices of the actors, even some of the labor, the behind-the-scenes labor that should be done by, let's say, colorists in films, for example, and the other people who are involved in the creative sector. There actually have been conversations about certain films which would not be showing real buildings. They would use AI to reconstruct an area or buildings in an area. And yes, in situations where money is involved, issues of ethics do come up. But we hope these are conversations that can be had by the creative industry itself on what's permitted, what should be permitted, what shouldn't be permitted, before things go all the way far down the rabbit hole until it's difficult to reverse things.
Siphumelele Zondi, thanks very much indeed. A tech expert, really do appreciate it. It is amazing how quickly things are changing without you even noticing half the time.
7:02.
7:02.
Stephen is on The Money Show.
6 to 8 p.m.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. Well, you know, one of the big problems facing smaller businesses is managing their money. Getting capital just to start, then, of course, managing their money to keep going. It's not an easy thing to do. Ndimiso Zulu is the CEO at the Masasazane Fund on the line now. Ndimiso, good morning. Good morning. Good evening. Obviously, there are different types of funding for SMEs in South Africa. Sometimes you actually need to make sure you choose the right one. How should you go about making sure that you're making the right application to the right fund for the right kind of funding?
Good evening, Stephen. It's a pleasure talking to you and your listeners. That's a very good question. It always starts with the business need. In other words, what do you need the funds for? I think in broad terms, the type of fundings that are available to SMEs, it could be things like grant funding, which a lot of SMEs love because you don't have to pay them back. That usually comes with a lot of conditions. There's obviously debt funding, which is usually the main funding and most available source of funding for small businesses. And obviously there is equity funding, and there are different players in the market that provide that type of funding solution. So, for example, if you're looking for a grant, a bank is not the right door to knock on because banks are in the business of lending for profit, for example. Similarly, private sector companies don't always offer grant funding. That's something you will find in multilateral institutions or development funding institutions that are usually providing that for the purposes of driving a developmental mandate. So a very critical starting point if you're an entrepreneur looking to raise funding is to first say, what do I need this funding for, and for how long do I need it for? So, for example, if you're looking for funding to acquire equipment that has a shelf life of 5 years, for example, then equity funding, because it's long-term in nature, is not the right instrument. So that's just the one example that comes off the top of my head. This is all by way of saying, as an entrepreneur, before you go out there to raise funding, make sure you have a working understanding of the funding landscape and the instruments that are available to you for the specific business needs that you need to satisfy. And sometimes it can seem like it's a lot and overwhelming, but really it comes down to those three broad categories. Either grant funding, that somebody is gifting that money to you for or to your business. It's loan funding, which means whoever gives it to you expects it back at some point plus some return. Or it's equity funding, in which case it's somebody that is now your business partner. They are a part owner in that business with you. That also means giving up some semblance of control in your business. So those are some of the choices that you'll have to think about in making the final decision.
Are there certain mistakes that you see people make again and again when they're looking for money, when they're applying for money?
Oh, 100%. I mean, the first one and the most obvious one, it's not understanding that fundraising is a process and not an event. So oftentimes I find entrepreneurs coming to me or professionals like myself saying, I need funding and I need it to, for example, fill an order that is due in a week's time. And I say to them, I don't know you from a bar of soap. The amount of vetting and background checking and assessment that we need to do can probably not be done in a week, and in any event, you probably don't have all of the information I would need to do the assessment. So as a start, understand and appreciate that raising funding is a process, and it's really driven by the person trying to raise the funding. So readiness to raise funding is very important in that conversation. But also, one of the key mistakes I encounter, particularly for entrepreneurs that have been rejected a few times, to a certain extent, desperation creeps in, and then people say, I will take whatever funding comes my way. And to my original point, you need to actually match the funding source to your funding needs. So what I mean by that is, for example, people end up taking very expensive non-secured loans, for example, which then makes it difficult for the business to repay, or even if they can repay, it's so expensive, the business itself becomes unsustainable. But also it's important to understand the terms and conditions that you sign up for when you raise funding. A lot of entrepreneurs get surprised at the end of the day when they discover after taking the money some of the things or some of the control they've given up. Primary example, if you borrow funds from a bank or another lender, there's usually a condition that says you shall not raise another cent of funding from another lender without my consent as the original lender. Most people ignore that. They go ahead and raise the funding, but now you are in default. And that triggers a whole lot of consequences down the line for yourself and your business. So those are the three sort of common mistakes that I can think about that most entrepreneurs make. And they can turn an otherwise successful business and it finds itself in financial trouble.
What do people look for when they're assessing these applications for money? I mean, this is probably the billion-dollar question in this argument, in this discussion.
Correct. So as a start, I think a typical funder or investor wants to understand what is the business opportunity here, or is there a market or a need that you're trying to satisfy. I always say to people that not every business idea you have actually results in a business on the other side of it. So as a funder, it's important to understand what is the business case here, and it's incumbent upon the business person to articulate very well. Most businesses fail at that stage because, remember, as a funder, I don't know you or your business from about soap. So if you don't explain it in the way that I understand it very clearly, we don't move very far past that point. But also, lenders look at your past behavior or your track record of history, particularly when it comes to things like how have you conducted yourself as a business in terms of credit agreements. So, for example, have you defaulted on loans in the past? Because, again, if you have a track record of not honoring your financial obligations, why would you honor mine? So, again, that then becomes a problem. But also, you put a lot of stock as a lender or investor on the caliber of the person sitting in front of you, because on day one you take it's $1 million, it's 10 million or whatever funding you need, and let's say it's over a 5-year period. As a funder, I have lost all control whatsoever over the money I've given to you, so I almost have to sit and hope and pray that you're going to pay me back. So on day one, I then need to be comfortable that you are the right person, you are an honest person that would actually be able to make a success of this business and then honor your obligations that you have created to the funders in terms of the underlying credit agreements. I think those two things are very important.
And I mean, some people ask for money and they get rejected all the time, just again and again and again. I mean, is there any advice for them? I mean, do they need to think about what they're doing differently?
Correct. I've had the misfortune of having to reject probably more entrepreneurs than I've granted funding to, and I've been called anything ranging from an enemy of progress and other words I can't repeat on air. But really, I think it comes down to, are you knocking in the right door for the type of funding you need? So, for example, if you are knocking on a venture capitalist door for funding and you are not the type of business that has the potential to grow exponentially, the venture capitalist is always going to say no because you are not their target market. Similarly, if you go to banks looking for funding, but what you actually need is patient capital, somebody's going to hold your hand, you are knocking on the wrong door. You should be talking to DFI. So find out as an entrepreneur if you've been rejected for funding. Why have I been rejected? I find most people sort of jump into conclusions or assume why instead of just flat out asking the question, why did I not qualify for funding? What can I do better so that I can qualify next time? But also just appreciating that the fundraising process is never easy. But also that funders have different objectives. So sometimes somebody says no to you, not because you don't have a business case, not because you don't have a good business. You just don't meet their requirements or what they are trying to achieve in terms of their business. That would be my advice.
Ndumiso Zulu, thank you very much indeed. CEO at the Masasazane Fund.
The Money Show.
Investment School.
The Investment School is brought to you by CFI, a leading global trading platform now available in South Africa. CFI Financial is an authorized financial services provider. Well, in Investment School tonight, we're looking at the topic of investing in emerging markets. And you may scratch your head a little bit and ask yourself, but isn't South Africa an emerging market? The answer, I suppose, is yes. Chantel Marks is head of equity research at F&B Wealth and Investments in your Investment School studio now. Chantel, good evening. Good to see you again. Thanks for coming in.
Oh, it's an absolute pleasure.
I suppose the first question is why emerging markets? And you could look at British and American stock markets right now and say, where else would you put your money?
Yeah, so I mean, from a South African investor's perspective, right, most of your money will be in South Africa, particularly if you look at something like retirement savings that's regulated quite heavily. And in the past, when we've externalized our funds, we've mainly been going to the US, we've been going to Europe and dabbling in China a little bit. But I think that there is a case to be made for investing in emerging markets other than South Africa and even outside of China. And the main reason being that a lot of these markets are showing rapid growth well beyond developed market growth. And there are some really interesting industries that are different from the industries that we'll get in South Africa. So even though these stocks these stock markets could look optically like they move with the South African market because we're part of a broader emerging market basket, the reality on the ground is that you can get exposure to stuff that you can't get exposure to in South Africa and benefit from much higher growth.
I mean, I suppose, there's quite a lot to it. We know, and one of the reasons that you get a better return is that supposedly there's more risk. And how do you categorize the risk compared to more developed markets?
Yes, so it's definitely riskier. I would say it kind of falls into the same risk basket as South African stock market. But then again, all emerging markets aren't made equal. So you'll have emerging markets that almost operate like a developed market, something like South Korea or even China to a certain extent, very sophisticated markets and very sophisticated market dynamics, and don't necessarily move the same way that South Africa does. Then you have some riskier emerging markets like Colombia, for example, and there you might think, well, maybe the risk doesn't justify the reward. And it's also very important when you're looking at it from a South African investment perspective to say, well, what do I get from investing in these markets that I can't get locally? And good examples would be I can get technology exposure by investing in Taiwan or in China that I can't get in South Africa. And think about it that way. You're actually adding diversification benefit to your portfolio because you can't get that necessarily locally.
And you also don't know what's going to happen, and you need to pick some winners in your investment basket, don't you? You need to pick some things that are likely to grow.
Yes, and when we're looking at emerging markets stock investing in particular, it's very tempting to say, well, I'll take the exchange-traded fund route. And there are exchange-traded funds available that are listed on the JSE, and you can kind of pick your market that you want exposure to. Not all of them are available, though. There's no Latin American exposure. But you can say, well, I think India is moving in the right direction. I'm really excited by the Indian market. I'm going to buy an Indian stock ETF. But you need to understand what is in there because some of it you might not like. A good example would be the MSCI China that carries a whole lot of construction companies, and we know the construction sector is in trouble in China. So it could be worth your while to be a little bit more choosy or a little bit more picky when you're starting to think about investing in emerging markets outside of South Africa.
How do you go about identifying which markets will give you, growth and diversification, and which ones maybe you need to avoid? And obviously, past performance is not always an indicator of future results.
Absolutely not. If you look at the return of the MSCI China over the last 10 years, it's given you almost nothing. But in the last year, you've gotten 34%. So I think that it's very important to consider valuation. So look at something that perhaps is a little bit unfairly categorized as uninvestable, for example, but that has some really good fundamentals behind it. I mean, China has been under so much pressure, but the economy is still growing at 5% a year. China's not under pressure and showing a 9% collapse in GDP. It's not the same as Argentina, for example. So when you're selecting the market, it's important to look at the economic growth dynamics, look at things like whether or not there's an inflation problem, or at times you get hyperinflation, because that can really have a detrimental impact on your returns. And then the regulatory environment is very important. One of the reasons why China has been a problem over the last 10 years is massive regulatory intervention, and unnecessarily so, in the technology space. But they've really changed their tune over the last year or two. And I think that it's unlikely that we're going to see them interfere in the way that they did prior to COVID-19.
I suppose you need to spot a wave, don't you? You need to know China's going to do this, or Colombia is going to do that, or India is going to do this. I mean, if you'd invested just in the Indian economy generally 10 years ago, you'd be sitting quite pretty right now.
Yes, and I think India is also one of those examples where there was a lot of news flow around India. A lot of people were talking about Modinomics and what he was going to do with that country, and we could see unfold in front of our eyes how literacy rates were improving, how incomes were growing. And when you've got a consumer that's more educated and in a higher income bracket, that means consumption expenditure increases. They were clearly in a building phase, so it was a good time to invest in anything to do with infrastructure in India, and their businesses were humming along quite nicely. The problem with India was just we didn't know how to invest, because the biggest companies are most liquid companies, and that's kind of where you want to be. If you look at emerging markets, you really don't want to go and scratch around the small and mid-cap space. But those biggest, most liquid companies were very confusing, and most of them were conglomerates or banks. And we didn't necessarily want exposure to banks. And a conglomerate is strange, because if you look at the biggest company in India, Reliance Industries, we want their retail business. We really want that. But do we want exposure to their oil and gas business? Or does it make more sense to rather invest in a Shell or a BP or a Chevron?
How do you go about deciding which companies to invest in then? And obviously a huge amount of research, especially if you're going into a place that you haven't really known very much before.
Yeah, I mean, so as I noted, you don't really want to scratch around the small and mid-cap space, because I think you need an on-the-ground understanding of the dynamics of a specific market, and you need to actually understand culturally what is going on in a specific space. The first thing that you can do from an emerging markets perspective is you can actually eliminate the stuff that you already have a lot of exposure to, particularly in South Africa. So it doesn't make sense, from my perspective, to look for a mining company, to invest in a mining company in Brazil, for example. I'd rather keep my mining basket in South Africa, where I know and understand the companies, even though a lot of them are internationally diversified. But we feel comfortable investing in a BHP because it's been around for the longest time. We've grown comfortable investing in the likes of a Glencore. But I don't know anything about Vale except for there was a massive dam disaster. Yeah. So when I'm looking at Brazil, I'm definitely not looking at a mining company, and I'm probably not looking at an oil company either. But we know that the Brazilian consumer is doing quite well. We know that there is a lending gap in that market. And those are things you find out by reading about that specific economy. And then you start thinking, well, what are the banks in Brazil? What are they doing? And you find gems like Nubank that would have done exceptionally well for you had you invested in it 5 years ago. It's one of the fastest growing banks in the world. And you can kind of follow a similar model by saying, okay, I don't have technology exposure in South Africa except through Naspers and Process. That eliminates Tencent, right? Because you already have exposure to Tencent. But the semiconductor space has been very, very exciting. NVIDIA looks very, very expensive, but right there at the start of the supply chain is Taiwan Semiconductor Manufacturing Company. It's one of the biggest companies in Asia, and if you bought it 4 months ago, it would have been a steal. Probably with the correction that we've seen over the last few days or over the last week or so, 2 weeks, 3 weeks. How long has the correction been in semiconductors? You'll get an opportunity to buy something like that again, and it could complement your portfolio.
I suppose also, it seems, these are all companies I've heard of. I thought that maybe in Africa you'd look at sort of Dangote or something like that. You really are looking at companies with quite big names. You're looking for established companies because you need to know that their fundamentals are going to work, and then you need to know that they've still got space for growth as well. You don't want them to have matured.
No, not at all. So you want them to have space for growth, to have a clear growth strategy. The rules remain the same when you're investing in emerging market stocks as they are when you're investing in South Africa or when you're investing in developed markets. You want strong management teams, solid balance sheets. They shouldn't have too much debt, good, positive cash flows, importantly. Their spending even on their investment expenditure should not be more than the cash flow that they generate. They should generate positive, what we call free cash flow. Revenue should have a clear growth path, and margins should be healthy. Because if you don't have that formula right, particularly in the emerging market context, when you get sudden large drawdowns, that means that there could be a shock in the specific stock market and your share price could fall quite a lot. When you get those drawdowns and the fundamentals aren't right, there's a higher probability that you will have permanent capital loss. So be on the safe side and follow that same formula, and you should be fine, and it will probably complement your portfolio quite well.
Permanent capital loss, that's what you call it. Flat line, disaster, we're dead. Yes. I suppose there's another question to this, which is how much of your portfolio should you allocate in this way? And this probably takes you to how aggressive you want to be, how unaggressive you maybe want to be. And I would imagine also dependent on what's going on. There was a time when the British government under Liz Truss was acting like what people had presumed emerging economies would act like, emerging markets, So it does depend what else is going on in the world.
Yeah, exactly. So one of the risk factors that's always highlighted around emerging markets, and the same is often said about South Africa from a foreign investor perspective, is we want regulatory certainty, we don't want political drama, we don't want mess. And then you look at the developed market world at the moment, regulatory uncertainty, political drama, mess. So these things happen everywhere, but because emerging markets might not be that established and they're not viewed as very safe, you get capital flight when these things happen, and you can get it in quite a big way. So for that reason, emerging market stocks or exchange traded funds or unit trust with exposure to other emerging markets will be part of your offshore allocation, but it will never be the biggest part of your offshore allocation. Your biggest part of your offshore allocation should be relatively stable, developed market companies and developed market bonds, because that will give you a whole lot of diversification benefit and lower the overall risk of your portfolio.
We're speaking to Chantel Marks on Investment School this evening, investing in other emerging markets. She's head of equity research at F&B Wealth and Investments. The time on Investment School, 10 minutes to 8.
The Money Show with Stephen Grootes is brought to you by Absa CIB, a Pan-African bank invested in your story and the potential it can unlock because your story matters. Absa is a registered FSP.
Continuing our conversation with Chantel Marks, head of equity research at F&B Wealth and Investments on Investment School tonight. We're talking about investing in emerging markets. Chantel, you were making the point that you need to be quite careful about how much you invest, what portion of your portfolio that you invest. And I suppose also you might also need to be able to make adjustments as you go. You need to be able to get money out. In other words, that's quite an important part of this.
Yes, so I think that's why it's important to have those liquid stocks and to look at the bigger companies within those markets. You don't want a situation where you can't actually sell what you've bought if you need to do that. If the fundamentals change and there's been a shift that has resulted in your magic formula of buying high growth companies with solid balance sheets and all the rest of that, if that no longer holds, you want to actually be able to sell those stocks. So, there are two kind of avenues if you want to invest directly. So you can buy an exchange traded fund. In South Africa, you can buy an exchange traded fund on the JSE that follows either India or China or Asia, or just an emerging markets fund, which is basically just China and Taiwan. A little bit of
Don't tell them they're in the same
Brazil
one.
in
Yeah.
there, a little bit of South Korea there, but you can do that, but then you'll miss out on the benefit of actually having or picking stocks that complement your existing portfolio and give you maximum diversification benefit. If you want to buy these companies directly, most of them actually also have listings in the US. So you can buy these stocks on the New York Stock Exchange with a global trader account or a global trading account, and it's a lot easier and a lot more liquid to do it that way.
I mean, and I suppose then you've also got to be able to use something that you completely and utterly understand. If you're going into a market that you haven't spent much time in before, it's not South Africa, it's not Kansas, it's safer than Kansas, you actually need to sort of make sure you understand exactly what you're getting into.
Yes, and I think that information is extremely it's extremely empowering to have all the information at your hands as an investor. So, I mean, let's say we looked at India 10 years ago and you start seeing these headlines about how Modi is going to change everything, how we're starting to see green shoots in India, how literacy rates are improving, how equality is improving from a gender equality perspective, all of those kinds of things. Then you can start investigating. And there's so much information available online, but you need to look at reputable sources. So if you started looking at, for example, the World Bank's economic growth projections for India and how that changed 10 to 7 to 5 years ago, there was a notable step up, and that already gives you confidence that a reputable institution kind of sees the same thing that you're seeing, and then you can start looking for your opportunities. I don't think it's a good idea to go in blindly. It's never a good idea to go in blindly, and it's definitely never a good idea to follow a stock tip, because you need to understand where that tip is coming from, and usually you get them around the braai. There's been a few beers. That friend of yours whose brother's uncle gave the tip about this stock in China that's going to shoot the lights out, that's probably not going to do you any favors.
Are there risks to doing this? I mean, obviously there's a reason why they're emerging markets.
Yes, absolutely. So the biggest risk is that emerging markets tend to move with each other when there is overall risk on or risk off sentiment. So when things are going well and investors are feeling really good, emerging markets tend to do quite well. But that would include South Africa. So you have that move with South Africa up. But the same is true towards the downside. Your volatility is a lot higher because you get this capital flight from foreign investors whenever they feel nervous. So the volatility is quite big. But as South African investors, we are used to the volatility of the rand, and we are used to the volatility of our local market. So the rules remain the same. Stay invested. Don't panic, because you are definitely not panicking first. And remember to stay the course. Unless something drastic changes, you shouldn't deviate from your long-term investment plan.
You made the point that emerging markets tend to move in groups. They tend to move together. And I always find it interesting that we've sort of been lumped with Brazil. Fine. Russia? So, does that mean that actually you need to pick one? Or do you find that whatever you do, they're going to move together anyway in some way? I mean, obviously, if you go down to individual companies, well, then that will be very different. But are you going to find it actually quite tough to differentiate yourself in this market?
So I think that they've started moving together less, and there's been a decoupling between the emerging markets that are very exposed to basic industries like mining and agriculture, and we can actually place South Africa within that basket. We can even place Australia within that basket, because it's a very important part of our economy. And then kind of technologically strong economies with strong tech underpins like South Korea and Taiwan and China, and more recently India. These countries tend to move differently to the other emerging basket, which will also include Colombia and a few others like Indonesia. So, yeah, there's been a bit of a decoupling, but generally the reason we say risk on and risk off is when we're saying risk on, it means that investors want to invest in risk. And then you generally see flows to all emerging markets, regardless of where they play on the spectrum or what the composition of their economies are. And the same is true when it comes to risk off.
Chantal Marks, thanks so much for coming in. Really do appreciate it. Head of Equity Research at F&B Wealth and Investments on Investment School tonight.